Okay, good morning, everybody. It is Friday, October 22nd, 2021, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. Had a pretty good bullish follow-through yesterday, so remember that our bias going into the open yesterday was bullish, and what we expected was a push up into 45.30, a push up into 30 to 31 quarter, ended up pushing to that 32 or 33 quarter area, pulled back, and then we got a nice bounce off our eye level, and then eventually came up to exactly where we expected, which was the all-time high, and we expected a break of the all-time high, or at least a test of it, and we got this little 3-point push higher to the what is now our previous daily high at 45.43, and then this nice healthy pullback, and then the bounce. Notice where we bounced there, right off this previous area of resistance, and also a nice 61.8 retracement, if my eyes are correct here, off of that leg. So I guess a little bit more protracted through that specific leg, but the whole leg itself right to the 61.8 there. So pretty nice bounce into the Globex, and then we got this continued slow chug higher coming in now. So let's go ahead and look up to our ultra high time frames and see what they are telling us this morning. Excuse me. So coming up to our quarterly chart, now we've got a nice green bar here, or blue in terms of my color scheme, but a nice green bar now, assuming we continue to hold and push with that huge wick to the downside. So now you can see, if you took a snapshot of these two candles and then you came down and compared it to these two here, looks very similar. These two candles a larger range overall, but pretty much looks exactly the same. So it would be nice to see them go ahead and push. Let's go ahead to the monthly. Monthly again, we did have the bearish divergence from last month's high, which we kind of identified again right at the beginning of September. And then we saw the sell-off going into October. And then remember, October 1st was basically the major low for this candle. And then we got that really strong push. So right now, we have that candle that I was talking about. We have that nice bullish engulfing candle. So the price action on this candle engulfs all the price action from last month, which is a bullish omen for the future. So we'll see what happens there. Our weekly still looking really strong. Now, what you're going to notice is we are going to have this kind of argument for bears now off the highs, because we've now broken the all-time high. Just a little bit higher, not much, right? It was like 3 points higher. But the RVI is significantly lower right now. So assuming this continues to push, and maybe this 27 extension to 46.80 is the first likely target for this nice pullback to the 50%, and then a push up to the 27, which we see over and over again. As this pushes up into that area, assuming it does, this RVI is still going to be lower than back when we were last at 45.40 here. And so there will kind of be an argument as we push that we still could say, well, there's divergence, there's bearish divergence as it goes, until it eventually comes up and breaks 81 on RVI here. So we just have to kind of keep in mind that that weekly at some point might start to line up with the daily with a bearish argument, and we'll keep it in mind. But a lot of times, even going back here, let's take a look, even going back through all of 2020 and all of 2021 now, we are going to get some bearish patterns off the highs. And you're probably tired of hearing me say this, but it's expected to see these kind of bearish patterns in the bullish push. So we'll have to kind of watch and see when we get a decent alignment up top. Maybe that will give us a slightly red week or something like that. But overall, things are very strong still. From the RVI range perspective, we still have not gotten anywhere near 60, which is still bullish. In fact, holding above 40 is bullish on the RVI range. We're still up in 60, and for years and years we've rarely been below 60. The only times we've broken below 60 is when we had these huge corrections in the market. Remember, this was back in October of 2018. There was a huge sell-off. I forget exactly what the catalyst was there, but at the end of 2018 we had a really big correction, and then this was the COVID correction. That's the only two times we've been below 60 here on RVI, except for little peaks below here, but essentially still in very bullish territory if the market stays above that 40 line. So again, very, very strong overall, but we're getting a little bit of those clues for bearishness, or at least exhaustion in the push. Yesterday, remember on the daily chart, we talked about how from the candle that closed the day before yesterday, we had a little bit of a bullish argument because we did not come up and break the all-time high at 45.40 just yet. We were pretty close, but the RVI was already higher than when we were back here at 45.40. So we had kind of an argument there, and remember, we were kind of taking it lightly because of the overall context of the bullish momentum. Well, it looks like this has just continued to carry through in a straight line, so not really going to be keeping that on there, right? So essentially it was a false signal. Now, if it started to roll and we actually did get a turn and an actual peak there on the RVI, then yeah, maybe we could say, yeah, we still have a divergence right there, but we don't. And they ended up pushing higher anyway, so if there was a divergence, they essentially the bulls negated the bearish indication. So right now, we've pushed to new all-time highs as of yesterday, and then in the overnight session have pushed to new all-time highs again. And as we do that, we get higher and higher RVI, so everything looks pretty good here. So no signs of bearishness on the daily, no signs of bearish, well, a little bit of a sign on the weekly, but then the monthly and the quarterly all look strong. Our 4-hour essentially is the same thing as yesterday and the day before. So remember, 2 days ago we came in, we had the bearish case off the previous high, and then a bullish case off the overnight low. And then yesterday we came in and said, oh, it looks exactly the same. Bearish from yesterday's high, bullish from the overnight low. Well, this morning, it's the same thing, and this is kind of what it's like when you get these pushes. You got your bearish case off of yesterday's high, which I don't know why it's not marked there, but the bearish case off of yesterday's high, and then we have the bullish case off the low. So there's some bullish divergences off the overnight low, the actual low that we made last night. But on the 4-hour, it's up over here. So we have the bearish case over there, and then this bullish case off of this low, and we're going to see a bunch more bullish cases off the overnight low. So essentially the same thing, bearish from the previous highs, bullish from the overnight lows. And then right now on the current candle, there is a bit of an argument that we did push higher than yesterday's high to like 3 points higher, but the RVI right now, for all intents and purposes, is flat. Right, it's basically the same number. Let me look at on the actual value for RVI here, 72.8. The actual value for here, 72.97. Okay, so arguably it is just a little bit higher. This is just a little bit higher. So maybe not. But we still have to wait for this to close. So if this candle does close at 7 a.m. Pacific, and the RVI does close maybe just down at 72.8 again, there will be that bearish case. So we'll kind of watch that. And I would say there's a soft bearish kind of argument there from that high, assuming this RVI doesn't close at 72.9, but closes at 72.8 there. So just going to have to watch that. And again, you keep seeing these bearish patterns off highs. So do we want to just short the market because everything's lining up bearish from here? We might want to wait for a little confirmation of a lower low, a lower high, maybe once or twice, and then maybe it'll become apparent. Because overall, we're going to see everything else is really strong and bullish, just like it's been for quite a while. So again, we have this is what we kind of mentioned just before we started the pre-market. the fact that we are getting these bullish divergences on the current pullback. So right now, 60-minute does have the bearish agreement off the high that we just made in the overnight. So a bearish argument from the overnight highs, but bullish argument from the overnight low. So again, it's the same thing as yesterday, same thing as the day before. But right now, argument off of the low of this candle, assuming it stays the same. This is 6:17 in the morning. This doesn't close until 7 a.m., so about 45 minutes left before this officially closes. This whole picture could completely change, and if they break the low where this candle is forming the divergence off of at 45.32, then we won't have any type of bullish argument there. So that 32 there, if that breaks, our 60-minute will no longer have the bullish case. In fact, I don't know if I want to mark it because it's not a closed candle, but we'll go ahead and draw the lines in, and then we'll mark it once it closes. So it's basically, I mean, same thing as yesterday. Ideal for the bulls this morning, first of all, we don't want to break below 50% of the previous 4-hour candle and hold below it, because that's our first kind of line in the sand for the bulls. Furthermore, we have to get 50% of the previous day, which I don't know why it's not on the 1-minute chart here, or any of these charts. But we essentially would like to hold above that as well for the bullish case. So we could get a little correction here off the highs and come down, but ideally the bulls will hold about 26.75, and then again go ahead and push and break the highs we made in the overnight session, negating some of the bearish signs that we're seeing up top there. We did not go down to the intermediate, so let's take a look at that really quickly. Essentially getting agreement on all the signals we saw. Bullish off around the overnight low here. We got the other bullish signs over here right around where we saw the 4-hour and the 60-minute. And then we have the bearish argument off the high on the 30-minute here. Compared to the high from yesterday, we've got this push up, but this push down on RVI, and this high over here has never really been used for a divergence because nothing has ever come up to really either break the highs on price or break the highs on RVI. So argument there on the 30-minute for bearishness as well. And then there you can see a nice agreement with the 60-minute on the bullish case, assuming again they don't break below that 32 here by the time these candles close. Now this 30-minute candle has 10 minutes left, and then we will see we'll see if it closes looking similar. So bullish argument off the lows right now, and then bullish arguments from the overnight low. So pretty much just confirming the whole picture. Same thing on the 10-minute here. Got the bullish case off the current low that we're bouncing off of this prediction point, and then bullish off of the overnight low. No agreement with the bearish off the overnight high, but essentially seeing all the same stuff here. So I think we have a clear idea of what we want to do and what we would expect. We would expect a continued push higher. Although let me go back and kind of put this all together. Quarterly, obviously looking strong, no signs of exhaustion. Monthly, looking strong, no signs of exhaustion. Weekly has that bearish case because of the way that the pullback happened. So we got a pretty healthy correction and a pretty healthy correction on the RVI. And now that we come back and we've broken the all-time high, we are going to have this bearish argument for quite a while, unless this RVI really whips up and comes higher here. So we do have that situation going on with the weekly. But then we go to the daily, no argument for bearishness on the daily chart. And we go to the 4-hour, and that's where we get kind of both cases. So bullish off lows, bearish off highs, and pretty much the same situation all the way down to the shorter time frames. So overall, the picture is bullish because we don't have exhaustion on our higher time frames except for that one weekly little thing, which is kind of like we're stuck with for a while. So overall, bullish, expecting continuation to the upside, potentially pushing above the overnight high and getting higher highs this morning. If that doesn't happen and we can't hold above 3750 and ideally 26 as a last resort, then we could expect continued follow through from the bearish signals up top, and we'll have to reevaluate. If we push up here and we get a pretty strong rejection somewhere at one of the retracements of this push down, then we might want to just go ahead and throw some shorts on and see if we can get a larger push.